Welcome to another episode of Market Brief, After Hours. We've got a packed show today, breaking down a volatile Friday on Wall Street that capped off a highly dramatic week. Despite a solid surge to end the Friday session, the major indexes couldn't quite escape weekly losses. Let's start with the big picture. How did the U.S. markets wrap up on Friday?
Friday was really a story of investors trying to find their footing after some heavy selling earlier in the week. The S&P 500 managed a gain of 0.43%, closing at 7,674. The tech-heavy Nasdaq composite also rose by 0.43%, ending the day at 26,180. But the real standout on Friday was the Dow Jones Industrial Average, which surged 518 points, or 0.98%, to close at 53,277. This was heavily supported by a nice lift in big healthcare stocks like Merck and Johnson & Johnson.
A strong Friday indeed, but as we mentioned, the weekly picture tells a different story.
Exactly. Despite Friday's bounce, we saw back-to-back weekly losses for the Dow, which slid 0.9% over the week. The S&P 500 fell 1.4% on the week, and the Nasdaq lost 2%. Both of those indexes snapped 3-week winning streaks. The main culprit behind the weekly pain was the relentless march higher in Treasury yields. Investors are increasingly worried about inflation, especially with elevated oil prices. Even though Treasury Secretary Scott Bessent tried to step in on Wednesday by ramping up bond repurchases to ease pressure, that rally quickly fizzled out. By Friday, the 10-year Treasury yield rose to 4.734%, and the 30-year bond yield advanced to 5.273%. The shorter-dated 2-year yield also climbed to 4.232%. It seems like bond yields are really dictating the tempo right now. And this wasn't just a U.S. phenomenon, right? We saw global markets feeling the squeeze too.
Absolutely. The MSCI All-Country World Index posted a weekly decline of almost 1%. If we look across the Atlantic to Europe, stocks did manage to close higher on Friday, but inflation worries still drove a weekly decline. The Pan-European Stoxx 600 climbed 0.59% on Friday. In the UK, the FTSE 100 rose 0.65%, marking its sixth straight winning session, despite some unexpected news that UK retail sales dropped 0.5% in July. Meanwhile, Germany's DAX gained 0.59%, snapping a 4-day losing streak, and France's CAC 40 clawed back 0.37% after 8 straight days of losses.
What's driving the sentiment in Europe right now? Is it purely inflation, or is there some economic resilience showing up in the data?
It's a bit of both. We actually saw some surprisingly strong economic activity. The Eurozone private sector expanded at its fastest pace in 9 months in August. The composite output index climbed to 52.1. Crucially, the Eurozone manufacturing PMI beat expectations, rising to 52.8, the fastest expansion in 4 years. On the other hand, services in Germany and France are struggling a bit, contracting faster than expected. But on the wage front, negotiated Eurozone wages slowed to a 2.44% year-on-year increase in the second quarter, down from a peak of over 5.5% in 2024, which might give the European central banks some breathing room.
Now, let's shift our gaze to Asia. There was quite a bit of policy talk coming out of China this week. How did that impact their markets?
Beijing is very much in focus. Vice Finance Minister Liao Min announced that China will introduce additional fiscal measures in a timely manner to combat slowing economic momentum. This comes after some very disappointing July data for industrial output and retail sales. Because of this stimulus talk, the Shanghai Composite ended marginally higher at 3,905, and Hong Kong's Hang Seng Index jumped 1.1%, led by tech and financial stocks.
And what about Japan and the rest of the region?
Japan's Nikkei 225 had a tougher time, slipping 0.3% as domestic bond yields climbed near multi-decade highs. Japan's core consumer inflation picked up to 1.8% in July, driven by energy shocks from Middle East tensions, which has many believing another interest rate hike is right around the corner. Food prices there also jumped 3.5%. Elsewhere, South Korea's Kospi rose 0.9% thanks to chipmakers, while Australia's ASX 200 fell 0.3% as miners and energy stocks mixed. New Zealand stocks had a great run, rising 0.4% on Friday to hit 13,973, marking their third consecutive weekly gain.
Interesting dynamics there. Before we move on to the massive moves in crypto, commodities, and individual stocks, let's take a quick pause. Stay with us. Welcome back to Market Brief After Hours. Before the break, we were looking at the global equity markets. Now, let's talk about a sector that absolutely exploded this week, cryptocurrency. Bitcoin had an incredible run. What drove that massive 22% weekly surge?
It was an unbelievable week for Bitcoin. It closed Friday with a massive 22% weekly gain, ending the day up 6% at $76,943.90. To put that in perspective, it started the week around $62,800. The rally really kicked off on Wednesday when the Treasury's intervention in the bond market temporarily cooled yields, which gave risk assets a massive green light. That momentum triggered a massive short squeeze, liquidating about $2.7 billion in crypto short positions. Naturally, crypto-linked stocks went along for the ride. Robinhood shares jumped almost 14% on Friday. Coinbase added 7%, and MicroStrategy rose 6%.
That is a staggering short squeeze. Back on the macro front in the U.S., we also got some fresh PMI data that showed a bit of a divergence between services and manufacturing. What do those numbers tell us?
The divergence is very clear. The S&P Global U.S. Services PMI surged to 56.8 in August, well above expectations of 54. This represents the sharpest expansion in services activity since December 2024, driven by a sharp rise in new business. On the flip side, U.S. manufacturing activity slowed to a 5-month low. The manufacturing PMI eased to 53.2, held back by rising fuel costs, supply chain delays, and reduced inventory building.
Let's look at commodities. Oil prices have been highly sensitive to geopolitical tensions. How did they wrap up the week?
Oil was relatively flat on Friday, but finished the week over 5% higher overall. Brent crude closed at $94.39 per barrel, and WTI rose to $87.06. The weekly gains were fueled by Treasury Secretary Bessent's comments that the U.S. will impose the toughest sanctions in history against Iran.
And precious metals? Gold and silver seem to have completely broken out.
They absolutely rocketed. Gold rose 2.26% on Friday to close at $4,621. This massive bullish expansion shattered recent consolidation barriers and pushed gold well above its key moving averages, including the 200-day simple moving average at $4,501, the 100-day at $4,392, and the 50-day at $4,175. Silver followed suit, rising 2.06% to close at $69.46, reclaiming its 100-day SMA of $68.61, though it still remains just below its 200-day SMA of $71.25.
Let's pivot to the foreign exchange market. We saw some significant technical moves across major currency pairs. Can you walk us through the levels, starting with the euro?
The Euro-USD pair closed virtually flat at 1.1680 on Friday. But the technical structure here is incredibly bullish. The pair is currently trading above all of its major moving averages. We have the 50-day simple moving average at 1.1475, the 100-day at 1.1573, and the critical 200-day at 1.1630. This positive alignment suggests that buyers are firmly in control of the medium-term trend. As long as the euro holds above that 200-day moving average of 1.1630, the outlook remains highly favorable, with the next major target sitting around 1.1750.
The British pound also seems to be holding on to its recent strength.
Yes, GBP USD closed up 0.13% at 1.3648, sitting just below its session high of 1.3676. Much like the euro, the pound is trading well above its key technical levels. The 50-day SMA is at 1.3395, the 100-day is at 1.3432, and the 200-day is at 1.3424. We've seen a very aggressive V-shaped recovery since the July lows, and the buyers are clearly dominating the momentum here. If we get a daily close above 1.3676, we could easily see a run toward 1.3700.
On the flip side, the US dollar has been losing ground against the Canadian dollar. What are the charts telling us there?
The USD CAD pair extended its decline, closing down 0.16% at 1.3767. This pair is now trading firmly below all of its major moving averages, which is a very bearish sign. The 200-day moving average at 1.3846 is now acting as immediate overhead resistance, followed by the 100-day at 1.3914 and the 50-day all the way up at 1.4062. This downward channel has been intact since the June peak near 1.4250, and unless we see a recovery back above the 200-day average, the path of least resistance is definitely lower.
And let's not forget the Australian dollar, which had an absolute breakout session on Friday.
A massive day for the Aussie. AUD/USD surged 0.85% to close at 0.7173, printing a very strong bullish candle that closed right near its session highs. This surge pushed the pair comfortably above its key moving averages, with the 50-day at 0.6998, the 100-day at 0.7068, and the 200-day at 0.6949. This completely negates the previous bearish pressure we saw earlier in the summer and sets up a very strong upward trajectory.
Let's wrap up with some of the individual stock stories that caught everyone's attention. Who were the big winners and losers on Friday?
Moderna was a major story. The stock popped 9% on Friday, resuming its upward march. Remember, it surged nearly 177% on Wednesday after positive trials for a cancer vaccine developed with Merck, then fell 24% on Thursday as investors took profits. Merck itself ended Friday up 2%.
And with the surge in metals, I imagine mining stocks had a great day.
They certainly did. Southern Copper closed up more than 8%, and Freeport-McMoRan rose over 7%. We also saw Roth Stores gain more than 4% after beating Q2 sales expectations and raising its full-year earnings guidance.
Any notable decliners?
On the downside, chipmaker Marvell Technology fell over 5%, leading the losers in both the S&P 500 and Nasdaq 100. Also, utility stocks took a hit as Treasury yields climbed. Sempra fell over 5% and Edison International dropped over 4%.
A fascinating mix of macro pressure and sector-specific breakouts to end the week. That's all for today's episode. If you find this useful, please follow Market Brief After Hours. We'll see you next week.